Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Before we get to the charts, I do need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. Charts you're looking at are real-time market snapshots and may not be replicated going forward. We're going to give you a look at the weekly charts today. Here's your daily Australian dollar. You see you had the market continued that pull back following that nice correction on Thursday. It actually closed above par, though. Market managed to close above the figure. All along we've been saying that this is an asset class market. We would look forward to the possibility of a correction here, potential for investors to reload at more favorable levels here. I think overall, the global economy is doing better than we thought it would have been a year ago, particularly the U.S. economy. And I think that favors the overall trend in this market. Again, though, nothing wrong with a correction. If we like it, if we like this market around par, we love it. Around 95. So let's keep an eye on it and see if we do, in fact, get a correction down there. The Euro, U.S. dollar, next market. Euro, U.S. dollar coming up now. You had a pretty good spill-off late in the week. Here, let's show the daily first. You took out that daily trend line. You definitely shifted your daily direction line lower. So the short-term trend on the daily is lower. You have now a pattern of a lower low here, and you had the higher low in place right here, and now you have a slightly lower low here. You still have to keep in mind this could be a bull flag. On the other hand, in the bigger picture, with that daily down like that, and in the monthly down, also you're below your monthly directional line. Out of resistance overall. Let's go to the weekly, and you really get the picture here of the pattern of lower highs and price patterns. So important in trading. It really is. Lower high, lower high, lower high. So progressively lower highs, higher lows on the other hand, but we'll have to see. So to me, I think you have to take this trend line break very seriously. You have indecision on the weekly chart. Look at those 3 shooting stars in a row. So you have 3 shooting stars in a row. Tough to hold its gains. I think that the overall price pattern is going to hold, and you're going to break down this trend. And this actually being a lower low to that, see that? You had a low here, then a lower low there. I think that was telling. So you have a lower low here, you have a higher low there in the intermediate term, and then the long term too. So I'm kind of bearish on that guy. Hey, let's look at the pound U.S. dollar next. Pound dollar. First we'll look on the daily. Pound dollar's not looking all that bad. However, you could see further weakness just based off of dollar strength. On the other hand, the U.S. economy continues to put up pretty sound economic numbers. I think the U.S. economic team has really done an outstanding job. Compared to what they said they would do in 2009, they did it. 2010, you started to see the recovery. The summer of 2010, it got a little iffy. Summer of 2009 too. In 2010, you had that big sell-off in April, May. But they did what they said they were going to do, and the market responded. And I think that's why you're seeing dollar strength, and possibly you could see long-term dollar strength off of that also. Now, I think the pound is pretty strong here overall. It's holding its gains. It's still above 160. On the other hand, it could. I think the strength is due to the pragmatic approach that the Bank of England has. I think I trust the judgment of the Bank of England. However, if you see dollar strength, it could just spell de facto weakness for the pound. But I come to the weekly here, and the pound doesn't look that bad. It's you got a flat top there. You do have a long-term pattern of these progressively lower highs. On the other hand, it's holding up okay. So I think the pound, you could see a range trade potentially. So that could be something to watch long-term. Let's go to the chief. And I guess we can focus on this weekly right there. Let me get that daily out of the way. There's your weekly picture. Look at the monthly line up there. Interestingly, that monthly line's just highlighting the '08 and '09 lows. I think that's a natural target for this market, given that the strong weekly close. You shifted the weekly trend higher now. Well, technically, you were above that weekly direction line all along when you had this change of direction right there. But look at the MACD now. You have some momentum. So I think par is a natural target for the dollar Swiss. We spent a lot of time with the dollar Swiss in our live trading exercise this week, or what we call our live market exercise, where clients of the firm, clients of clovernest.com, we invite our clients to sit in a live trading exercise with us, and we point out setups and signals in live markets. And the Swissy was really a favorite of ours all week long. Here's your daily look at it. But I think this market's coming to life. I think you have a little bit of room on the upside. And, I'll say it. I think long-term you could potentially be in for a sea change in these currencies, and this market's going to be a benefactor of that on the upside dollar chief. We'll have to see, though. This is a game you take it day by day and then week by week. Currently, the monthly's still down. However, the weekly's up and the daily's up. Let's look at dollar yen. And we'll tell you more about that live market exercise as we go along here. We're very excited. We just we had compliance approval for that. It's been reviewed by the different regulatory agencies. Our website is all. We've just released that, and you'll be hearing more about that. We'll have to do a press release on that. Right here, though, back to what's going on now. The dollar yen. Here's another strong one. Very telling that you had a higher low here, and then you have another higher low. Interestingly, you're taking out some serious trend lines now. If you can take out 94 even, that's going to be big. So 84 even, I'm sorry. Oh, 94 even. Maybe that was a subliminal slip up there. We'll see. 94 even is a ways off. But 84 even you have to tackle first. You had a little indecision in the pullback that you couldn't hold your gains. I think that's normal for a Friday. Traders don't want to commit to positions ahead of that weekend. So naturally you saw a lot of guys that were bulled up and had nice positions on them, and profits too. Probably took profit ahead of the weekend, and that's why you created that wick on the daily. This guy's looking real good, though, I think, long term. Let's take a look at the weekly. Similar story to our guy, the chief there, the dollar Swissy. Look at that. That's a potential long-term bottom. Look at how close you are to that monthly line. Now, this is a massive bear market, right? I tell you what, at the same time, as big as a bear market is, look at how close you are to the bottom. And potentially you could get it. See how prices get compressed like that? That's a sign of a market that's just it's not going anywhere. It's not responding to anything. It's essentially bottoming out. But when it gets compressed like that, you get lucky. You have the monthly level so close to the bottom there that technically you could have a monthly shift at the bottom like that. Generally, you don't get monthly shifts until you've come off the deck a bit, until you've come off the floor a bit. But in this case, you saw that long-term picture. You could potentially have a monthly shift very close to the lows here. And that's something to be excited about. Let's take a look at our good friend, the U.S. stock market. We've really been bulled up on that. We've been talking that guy. We're just going along with what the market's doing, which is the way to do it. Look at that, how strong that is. You don't want to get in the way of that. The big question in my mind is, can you have dollar strength simultaneously strong U.S. stock market? And if so, is it actually the strong U.S. stock market that's attracting capital flows into the dollar? That's a possibility too. You're in a bull market. We said that once you took out 1275 on the upside, essentially you switched from being still in the grip of the bear market created by the 07-08 panic, and now you're in a new bull market. Bottom line, we wouldn't mind seeing if it corrects a little bit, but the markets are going to do what it's going to do. We've been bulled up, and we've just been following this bull up all along, so I see no reason to change our analysis. We just analyze what the market's telling us, and I think from a trading perspective, that's a smart way to be. Hey, last market, let's take a look at the U.S. dollar index, and then we'll wrap it up. And thank you for attending our weekly report. Coming to you from Chicago. The weather's a lot nicer in Chicago this weekend than it had been. Boy, we were doing the live market exercise. It was 6 below zero in Chicago. Today it's a balmy, I'd say 30 degrees out there. It's a heat wave. It's gorgeous, sunny out. The lake's looking nice and blue, sun shining. At any rate, enough of the weather report. Let's get back on track here. This is what we were looking for. The weekly shift. We'll have to, if by closing above that weekly line, the dollar shifted its weekly trend higher. Now, guess what? The monthly's higher, the daily's higher, and now you're shifting that weekly. That weekly line will go down here. So there you go. Come Monday, that weekly line will be higher. So look out for the dollar. Very exciting. I think we're all in the right place at the right time for some pretty big moves. There you go. I think you have a sea change move. Keep in mind, though, trading is a risky endeavor and not suitable for everybody. Hey, my name's Jay Norris. I'll be back with you on Monday. Thank you.